Hello, everyone, and welcome to this week's edition of our weekly coaching webinar. Sorry I was a couple minutes late. I had issues with my PowerPoint presentation. It would not let me start my PowerPoint for some reason. So anyways, I guess that's why you try to get in here early enough where you don't have those technical glitches. But I just actually finished up a podcast interview that prevented me from doing so. So my apology for keeping you waiting, and welcome to the website, or excuse me, webinar today. So a couple things before we get started. First of all, I wanted to let everybody know my apology for not sending an invite out about 2 weeks ago. 2 weeks ago, we did do a webinar on how to do a proper presentation, and because of a mix-up with Joni and I on our end, she didn't get out the actual webinar invite. But we did the webinar. People were still there. Not everybody was there because a lot of you didn't get that invite notice, but it is in your back office where all the weekly webinars are. So feel free to check that out as time permits. I hope you enjoyed hearing from Dex last week. Dex, I hear, did a great session. There was a little bit of delay for us to get that webinar up because there were some technical glitches there, but that is also up, available in your back office. And next week, I have, I think, a special guest, a special surprise for you, because I will not be hosting next week. Now, stop celebrating. That's not the surprise. The surprise is that I think that Pete Woodworth on our team will actually be hosting next week's webinar. He actually just sent me an email. He hasn't confirmed that he could do that, but he just sent me an email requesting to do a webinar for all of you and talk to you all about sales strategy. Now, most of you, maybe a lot of you haven't already talked to Pete. Some of you have. Pete is probably one of the most experienced people you'll ever meet in the business credit space. He's actually worked for the only other companies that have really ever existed offering business credit, and has literally made thousands and thousands of sales directly to people that are coming in for the purpose of building their business credit. So I really can't think of anybody more experienced to talk on the subject than Pete. And I will tell you up front, I have no idea of what he's going to teach you strategy-wise. I would imagine it's very different than what I teach you strategy-wise. So it'll be very eye-opening to hear from somebody else's perspective how you sell business credit, and from somebody that has massive experience and has sold literally thousands and thousands of business credit units directly. So he hasn't confirmed, but I think that he will be coming in and hosting next week. I might be on with him as well. I'm not sure, but keep your eye out for your email. As you know, Tuesday, we notify you exactly what the details of the webinar are. That being said, I hope everybody's enjoying what we're doing right now with the Finance Suite. We've got a lot of new stuff rolling out ongoing. We'll keep you abreast of that stuff as it rolls out. I think you're going to love some of the things that we're going to be putting in your hands here soon to come. So that being said, let's dive in. You know, this is probably the only webinar I've ever done that's based on an objection. And the reality is that business credit's phenomenal. We're all here because we love it. We love what it can do for our customers. But the reality is that there's a lot of people that just won't buy just because of business credit. Even though business credit's sexy, they don't see that as the primary driver for them to want to buy. And the purpose of today's webinar is to walk you through and teach you what happens in those cases, what you can do to walk somebody through the process of from where they really want to be, of getting money quickly, to realizing that business credit is the perfect avenue, the perfect vehicle to help them get there. So I've got a bunch of slides. I don't want to take too much time on an intro because we've got a lot to dive into. So let's get started right away. So what customers really want, hopefully, all of mine, and I'm going to actually go for technical glitch here and see, oh man, that's kind of weird too, because these all have, okay, we might not have them actually show up as they should, but I'm not going to mess with this too much. So let me go ahead and do this. So when I click this, it pulls up all bullets instead of just one, as it's supposed to, but I'm not going to go through and fix that right now. So prospects you speak with really have one thing they typically want, which is money. I mean, that's what it comes down to. You know, most people you're going to talk with, they don't have an interest in building a credit profile and score. Like, they're not going to come to you and go, hey, man, my interest is I want to build a credit profile and score. Okay, so even though it makes a lot of sense for them to have a credit profile and score linked to their business, that's not the primary driver for most people that you're going to talk to. And really, I relate this to the consumer credit world. It's the same thing, because with the consumer credit world, you don't hear people ever talk about them wanting wanting to build their credit profile and score. Okay, instead, what they talk about is getting a mortgage or getting a car, and the credit is the means to get these things done. Now, I learned this in consumer credit repair. We offer credit repair, we're very good at it, but nobody wanted our services. They wanted the mortgage, they wanted the car loan, they wanted what they needed credit to get, not to actually go in and fix the credit. So business credit isn't that far off of that conceptually. People are going to come to you and go, hey, my interest is in building a credit profile and score. Instead, what most people are going to come to you and say is, hey, look, I'm looking to get money as quickly as I possibly can get money. So to properly sell business credit, you have to first address their want of money. You can't ignore it. You can't say, hey, I know you want money right away, but I've got this shiny thing over here called business credit that you're going to like instead. So really the first step is that you've got to address that, hey, they want money, and you've got to address their ability to actually get access to money. So the first step in doing this is to see if they qualify for actual financing. Now, a lot of you have been through before, and I talked to you about the 3 C's and the 3 things that are required to get financing. And we're going to kind of talk about that as part of this, but that's not really what this webinar is. So if they do, you'll sell the business credit differently than if they don't qualify for financing. And that's why you need to know right away, because look, you need to know what's possible. Somebody's coming to you and going, look, I want money. I don't care if it's credit. I don't care if it's loans or credit lines. I just want money. Or sometimes they'll come and go, I want a credit line. The bottom line is a lot of people don't know what they want or what they can get. They just know they need access to capital to do cool things they want to do for their business. So you've got to ask these qualifying questions and let them know how their answer relates to their ability to get money. You got to kind of know if they can get money, because that's going to differentiate your presentation and how you present if they can get money versus they can't. And you also need to ask them this qualifying question and walk them through this mental process so they see what's actually available. And this is a tactic that I used very well when I sold business credit in the beginning. It's kind of a process of elimination. Well, do you have credit? Do you have this? Do you have that? And then I would explain to them what that would mean from a lender standpoint. And that really becomes crucial for you to actually be able to do that. So most prospects are not going to qualify for financing that you're talking to. It's just the way that it is. A lot of them, and it depends on the caliber of people you're speaking with, but I would imagine that no matter how you're getting leads, the biggest majority, 60, 70, 90% of the people you're talking to, they are not going to qualify for financing. They're just not going to be able to get a loan. And this is the reason that business credit makes so much sense in those cases, because it's the only type of money they can even get. It's the only type of financing that works for them. But that's not what you want to say to them. You don't want to just say, hey, look, doesn't sound like you can get money. Business credit's the answer. They need to know why. You need to walk them through this mental process we're going to walk through so they can see through a process of elimination what they can and can't get and why. So to know this, you've got to ask and explain a few things to them. And again, apologize in advance for these slides. I've got it set up right, but it's pulling up all the bullets in one. So I'll still go through them one at a time, even though they're all pulling up on the screen when I click. So one of your first questions should be, do they have revenue now? And if so, how much revenue do they have in a month? Okay, and you can ask them annually, but I like to say, how much money are you doing a month right now in revenue? Now, as most of you already know by now, if they have 10,000 or more a month, they might qualify for revenue financing. So that opens up that financing option if they do have 10,000 a month or more in revenue financing. But what if they don't? Well, if they don't, then what does that mean? Well, then they really aren't established yet. They haven't proven that their business model works. And this is where you've got to dive deeper with the customer. Look, you don't want to just say, what's your revenue? What's your collateral? What's your credit? Here's what you can get. You need to have a conversation with them about what that really means from a lending perspective. Hey, look, Mr. Customer, let me ask you some questions to give you a good idea of what kind of money you can get right now. That was something I used to say a lot at networking events. Hey, look, I'm in the business of helping entrepreneurs get money. Are you interested in getting some money? Yeah, I'll always take money if you give it to me. Well, great. Well, let me ask you some questions so I can kind of talk through a process with you to see if you can get money right now. Do you have revenue? Yes. Well, how much do you have a month? Okay. Well, I have about $3,000 or $4,000 or $7,000. Okay. Well, we've got this great thing called cash flow financing that might work, but it won't work for you because you don't have 10,000 a month. And from a lending standpoint, you're not really yet established. Your business model really hasn't been proven yet if you're generating less than that 10,000 a month. Okay, so what that means is it means it's harder for you to get money as a result. And that's what they need to know. They need to make the link that, hey, you don't have 10 grand a month in revenue. That means you're really just not established. You really haven't proven your concept for most lenders to want to step in and lend based on your cash flow only, and explain to them why you're asking that question, what their answer actually means to them. Now, you should also ask them their time in business and if their tax returns show nice profits. So look, how long have you been in business? Have they been in business a couple years? Well, then the next thing you want to point out is and ask them is, well, what kind of profits do you show in your tax returns? Okay, now this scares away a lot of entrepreneurs because of most people you're going to talk to, most do not show profits on their tax returns. And that's because business taxes are about 40% of revenue. So what happens is most businesses don't keep a lot of money at the end of the year because they have to pay 40% in taxes. So think of it like this. If you made it to the end of the year and you had $10,000 in profit, well, if you keep that and carry it over to January, you're going to owe the IRS 4 grand. If you had 100 grand in profit, you'd have to give the IRS $40,000 of that 100 grand. So what happens is a lot of business owners get to the end of the year and they go, oh crap, like we did good. Now we got another problem on our hand. We got 100 grand to spend and we can't keep it because if we just let it carry over, then 40,000 of that money is going to be taken by the IRS. So what they do is they buy things at the end of the year. And a lot of people's accountants prompt us to do this. You invest in other companies, other ventures. You buy things for the business advertising and marketing for next year. They spend the money so they have to pay less in taxes because the way a lot of business owners think is, hey, whoa. What can I do with 40 grand versus give it to the IRS? Well, I could buy advertising and development and this and this and this, and they go buy those things so they have to pay less in taxes. So that's exactly why they don't show a lot of profits at the end of the year. Okay, because again, if they do, they could pay 10 grand or more in taxes based on how much revenue they're bringing in. Now, this is something, again, most business owners just won't do until they're very well established. Because what happens is eventually you grow the business where you care about the financials, right? Because that's the only reason you're really going to keep a bunch of money in the bank and give 40% of it to the IRS is because you care about the financials. You know you're going to sell it. You know you're going to go public. You know other people are going to be making big decisions based on the profit you show. So you're forced to leave the profit there and let the IRS take a big chunk. So on paper, you look like you're making good profits and revenues and you make your company more appealing. This is a long way down the road. I mean, most people you're dealing with are not at this stage. They're in stages where they're still trying to use the money they have, not pay it in taxes, which is why asking the question will bring out most people that do not have tax returns that show profits. Okay, so again, they should know that running a business and showing no profit makes them even riskier. This is something you need to ask them. Hey, do you have tax returns? Do they show good profits? Well, they kind of show a loss. They don't show a lot. Hey, I get it. Right? A good accountant will tell you to write off most things. Spend money at the end of the year so you don't have a lot in profits. But stick with me here. So far, you don't have a lot of revenue, showing your model's not really proven. At the same time, you don't have tax returns showing you're keeping any money at the end of the year. So just think about this from a lender's perspective. And as you're starting to think through this, imagine the risk from their actual view, from their eyes. So the next thing is you want to ask them flat out, hey, how's your personal credit? And I've learned this a long time ago. Your answer is either good, excellent, great, or well. And a lot of it starts with well, or well, let me tell you this. Let me tell you the story. Well, I don't need a story. It's either good or it's bad. And anything other than good, great, or excellent indicates they've got personal credit issues. So what does that mean though? Okay. It's the next thing is you kind of want to ask them, do they have a mortgage? It's another good question. And I'll tell you why I'm going to ask that in just a minute. Hey, let me ask you this. Well, do you have a mortgage on your credit report? No, I don't. Now, again, everybody's going to give you different answers, yes or no. I'm talking to you about majority of people you're going to deal with. The majority of people are not going to have big revenues. They're not going to show profits on their tax returns. They're probably maybe didn't even have a mortgage before. So what does this mean that they have credit problems? Well, it means they have a history of not paying their bills, that they haven't properly managed the credit they've been given so far. So they're asking a lender to lend them money, and it's usually 10 grand, 15 grand, 20 grand, 50 grand. but yet their personal credit reflects that they haven't paid on the credit that other people have already provided them. And if they don't have a mortgage either, then that means nobody's even ever given them large amounts of credit before, if you think about it. So that's really why you ask them if they have a mortgage, because if they say, no, I don't have a mortgage, well, then you can say, look, I can help you, by the way, with the fixing of your credit. I do that myself, or I know somebody that can help you with that. But, the problem from a lender's perspective isn't that you have bad credit, good credit. It's that you have a credit history showing that you're not paying on the credit you're being given. And I would imagine that since you've never had a mortgage, that you're not dealing with massive amounts of money you're defaulting on. Your credit limits are probably what, $500, $1,000? Okay. So if you're not able to pay on $1,000 credit card limit on time, then imagine from a lender's perspective how tough it is for them to now turn around and give you $1,000 or $10,000. So again, if they haven't been able to pay on their credit they've been given, and the amount of credit they have been given probably isn't a lot, right? Because you don't run into people with subprime credit with $20,000 credit card limits very often. Most of them have $500 to $1,000 limits. So in that case, if that person wants 10 grand when they never had a mortgage, well, it's pretty tough to justify that to a lender if all they've ever shown is that even $1,000 credit limits, they're not able to pay on time. Now, again, you've got to walk them through this reasoning. You need them to understand from a lender's perspective why they might have a hard time getting money, because they might just say, well, you can't help me, I'm going to go to the next guy. So I walk them through this process of elimination of why they might not be able to get money, so they understand from a lender's perspective, hey, buddy, look, you don't have much revenue, showing your business really isn't established. Your tax returns are showing a loss, so you're not making money. Your credit is bad because you're not able to pay the credit you've been given, and now you're asking for somebody to give you 5, 10 times the amount of credit that you have reported now that you're not even paying on. So you can understand how this is starting to add up to make it tougher and tougher for you to get a loan. But again, maybe they have a signer. And if so that's something you want to ask them. But look, it's okay. What about somebody that's a friend or family member or partner that does have good credit that will vouch for you, that will front their credit and sign as a signer to be able to get you approved? Well, I don't really have anybody like that. Yikes. So a lender's going to take that. You don't even have somebody in your immediate circle that trusts you enough to be able to go in and be able to use their credit as a signer to help you. So again, these are kind of forces stacking against them, and that's the reality that you need to paint for the consumer. So with bad credit, the next question might be, well, how's their business credit? How many trade lines do they have? Now, I've learned not to ask people how their business credit is, because a lot of people will say, it's good, it's great, I got good business credit, and they don't really have any trade lines reporting. I just had this happen right now through email. Well, hey, I got great business credit. Okay, well, how many trade lines do you have reporting? I think I've got like 6. They sent me a snapshot of their Equifax. They have 1 account reporting. So most people think they have some kind of established business credit when they don't. So most aren't going to have business credit established. And to know this, again, you might want to ask them, okay, well, let me ask you this. How much credit have you ever obtained without providing your social? Like, how many credit cards do you have right now that are for your business that you got without ever having them do a personal credit check or giving them a social? This is a stunner. This is where people will go, well, I don't have any of those. And I run into these people again all the time. I run into high-level entrepreneurs that say, well, I build business credit. I got plenty of business credit. Okay, great. So you have a ton of credit cards that you got without providing your social security number to get approved, right? Well, no, I don't have that. Well, that's business credit. Just because you have a credit card with your business name on it that you linked personally guarantee and they used your personal credit to approve you, well, that doesn't even probably report to the business reporting agencies. That's not real business credit. Real business credit's where you don't even need to provide your social and you're able to come in and get financing. So also ask them about their bank credit. How much do they keep in their bank account at the end of each month? It's a good, simple question. Look, how much money do you think you have left over at the end of the month in your bank account? Now, this is going to tell you, 1, how much money they have, so you know how much money they have to pay. And 2, if they don't have 10,000 or more, they don't have good bank credit. Now you're starting to see a trend. So you've got challenged personal credit, no business credit, and you have bad bank credit. Well, okay, there still might be hope. Maybe they have collateral to offset the lender's risk: 401k stock, account receivables, purchase orders, equipment, inventory, real estate. If they have none, well, then they have no assets. and then they have nothing to offset the lender's risk. So all these things are compounding against them. Now we've got a situation where you're not really established because you're not doing much revenue. You're showing a loss at the end of the year on your taxes. You've got personal credit issues, no business credit, and bad bank credit. So all of your credit's down or doesn't exist. And the one thing we have is to help you at least get collateral to offset the lender's risk, and you have no collateral to offset the lender's risk. So let's recap this. So you don't have revenue or a proven model. You've got bad personal credit showing no ability to manage even small amounts of credit you've been given already, okay? And then you have nobody that trusts you enough to be able to front their personal credit either. You have bad bank credit, unestablished business credit, no assets or anything else off that you've been able to save or accrue to offset the lender's risk. Bottom line, what makes you lendable? Like, what am I missing? What am I not asking that would make you lendable? Why would somebody give you 10 or 20 grand under these circumstances? Now, look, you can word this however you want, but this is the process you walk somebody through of, look, this is why you might not qualify for actual financing right here. This is what they need to understand is, hey, look, I want money right away. I want it fast. No problem. Let's go through these questions. Well, this is what that means. Bad credit. Well, this is what that means. From a lender's mind, this is what that means. So we've went through all these questions. I don't see anything that makes you lendable. What am I missing here? What lendable merits do you have? What questions have I not asked that I should be asking? And the answer is nothing's really going to make them lendable. They simply are not going to qualify for financing with you or anywhere else. And that's the next thing that you need to relay to them is, look, based on what you said right now, you're just not financeable. You're not able to get money because you don't have any lendable merits. And you've got to map that out and explain. And if they do qualify, if it's the opposite, if some of the questions where they do qualify, they do have cash flow over 10 grand, they do have good credit, they do have collateral, well, then even better. Then you'll let them know that you can help them get financing with that factor: revenue, collateral, cash flow, revenue, collateral, or credit. And then you can get them even more money through business credit. So all's not lost if they qualify for financing, but that's the process you'll walk them through if they don't qualify for financing. But if they have no lendable merits, then you walk them through that process as to why. Let them know everyone they speak with is going to tell them no as a result. And let them know you want to help by making them lendable. So, and this is the exact conversation I used to have when I used to sell the finance suite. Look, based on everything you said, and you even told me, there's really no lendable merits here. Credit's bad, cash flow doesn't exist, collateral doesn't exist, everything that would make you lendable doesn't exist. So here's the deal. The unfortunate part is everybody's either going to do one of two things. Anybody you talk to is either going to tell you no or never respond. Have you dealt with that in the past? Oh, yes, I've dealt with that in the past. Well, guess what? You could talk to 100 people and you're going to get the exact same result. But you just happen to run into a guy right now that can reverse that can make this work for you, that can put together a plan to actually get you exactly what you're looking for. So since they have no strengths, okay, then basically the next step is we've got to create one for them. So actually, we've got to create a strength since they don't have one that exists. And the very first step of that process is to build their business credit, because we can't immediately fix their personal credit. We can't immediately give them collateral. We can't immediately give them cash flow. We can't. But what we can do is immediately give them business credit. So we look at every aspect of what makes them lendable, and we address the easiest and fastest one to address first, which is business credit. That will then get them access to cash credit, Visa cards, MasterCards, real money, in spite of having lendable merits, because business credit, they don't need cash flow, credit, or collateral to actually be able to qualify. They use that money to grow the business, giving them more revenue. So here's the process. Here's the deal, Mr. Customer. As we talked about, you don't have anything that makes you lendable now. So we've got to give you a strength. Well, we got to look at what's the easiest and fastest to give you. We can't put 10 grand in your bank account immediately, so we can't help your bank credit. We can't immediately fix your personal credit. We can't immediately get you collateral or assets, and we can't immediately spike your revenue. But we can immediately give you business credit. So my plan for you is, let's get you business credit. You'll start getting store credit right away, 60 days or so. Then we can get you Visa cards, MasterCards, real cash credit that's not linked to your personal credit within about 120 days. Then we take the next step of that, getting that money into your business, that'll help you make more money, right, Mr. Customer? Yes, perfect. Then that'll open up the door for revenue financing, for cash flow financing, so you can get even more money. Okay. You help them fix their personal credit. Either you do it or recommend them to somebody that can. So at the same time as we're doing this, I'm going to get you with somebody, or I'm going to help you fix your personal credit. So that's going to then open up the ability for you to get unsecured financing. And then as you're doing this, you're making more money, you're getting unsecured financing, you're getting business credit, then you get more assets, which gives you collateral, open up even more financing. And all of this is what helps you become profitable to open up SBA, private money, alternative SBA, all of those types of things. So with this plan, you go from being completely unlendable, where people won't even call you back or tell you no, which you've already told me is happening, to now being able to get money pretty quickly. Store credit within 60 days, cash credit within 4 months, the fastest way to get money without having lendable merits. And along the way, we're also going to open up the door for unsecured financing, collateral financing, cash flow financing, everything along the way. So you'll go from qualifying from nothing, from going to qualify for actually everything. So why is this possible? Why does business credit make sense? Okay, why is business credit the best answer for them? Then that's really the next step of it. Once you've walked them through this process of you don't qualify, this is what it means, and this is what you do, then the next step is you need to dive in and start talking about why business credit makes so much sense for them. Well, first of all, this is going to be built fast, because what happens is your business credit scores are based only on how you pay your bills. So what I'm going to help you do is get initial business credit even when you have none established. And then in doing so, we're going to help you be more lendable, and we're going to do it quickly because business credit scores are only based on payment history. So all we have to do is get you a little bit of initial credit that reports to the reporting agencies, which I'm going to talk you through and tell you how to do that. Then you'll establish a business credit profile and score within 60 days. Then you can use that to start getting real usable credit. So business credit, again, can be built very fast, and that's a message you have to portray to them, because that's what they care about. I want money quickly. Okay, I want money tomorrow. No problem, man. All you have to do is bring in somebody with good credit, because it's the only way it's going to happen. You can't immediately get your revenue up or get collateral, or fix your personal credit. So the only way you can get money faster is to have a credit partner. So you work on the credit partner while we're working on the rest of your plan. But just so you know, you can get money really quick with business credit. Within 1 week, you're going to get access to vendor credit, which is going to help you get most of the stuff that you want to use the money for anyways right away. Then that reports within 30 to 90 days, and then we start getting you store credit established. So it only takes about 60 days on average to get you store credit. And then after we start getting you about 5 store credit accounts, then you can move into cash credit in about 120 to 180 days. So in as soon as 4 months, if you walk through and do what I'm advising you to do and work with our team and work with our tech to get this done, we can start getting you Visa cards, MasterCards with $5,000 to $10,000 limits within 4 months. The only way faster from where you are to get you money is to come up with a credit partner. But you don't have to wait and try to look around and talk to everybody you know. We can get you started down this road, and at the same time, you can talk to credit partners to see if somebody else is available to help you sign and get money even faster. So another reason that they want to build business credit, you got to explain to them, is, look, the reason my strategy works is that business credit has no impact on your personal credit. So when it's done properly, we're not even going to look at your personal social. So we're not even going to look at your personal social. So all the problems you told me you're having on the personal credit side, we can ignore. And that's why business credit makes so much sense. And as you use the accounts, it's also not going to hurt your credit. There's no personal credit checks, so there's no inquiries that lower your score. And there's also even with bad personal credit, you can still get approved, because again, there's no personal credit check. And on top of that, you don't have this utilization problem. Whereas you use the credit, your personal scores go down. Because, Mr. Customer, that's important. If we're going to work on fixing your personal credit or get you to somebody to help with that, then what we need to do is build business credit that's separate from your personal credit, so your challenge personal credit won't affect your ability to get approved. And for the other reason, that as you build business credit, you don't adversely negatively affect your consumer credit while we're trying to fix it. So this lets us work on building your strength, building your asset, which is the business credit. And then at the same time, you're fixing the personal credit. And what we're doing over here to build business credit isn't interfering with that whatsoever. So business credit reports to the reporting agencies, okay, not the consumer reporting agencies. And again, this is something that they need to know. Hey, look, the benefit is that as we're getting you more and more credit, none of it shows on your personal credit, so it's not going to have any kind of impact adversely to your scores. Okay. And again, it doesn't report to the consumer agencies, so there's no adverse effect there. And as I mentioned, the 30% of credit that has to do with utilization, the 10% that has to do with inquiries usually lowers the consumer credit score. And in this case, it's not going to apply because, again, there's no effect to personal credit with actual business credit building. Okay. And that's something that, again, the client really needs to know, because that primarily is going to be one of their actual concerns. Okay, so business credit is used for lending decision, and this is something else they need to know. Look, here's the problem. Let me tell you what's happening. Right now, if you try to go get money, as I mentioned to you, not having business credit is going to be a huge roadblock because all lenders are going to look at this. So not having business credit established will get you declined for financing. And you told me you'd already been denied, right? Right. Well, now you know why. They're pulling your business credit. They're looking at your personal credit. They're saying your personal credit's bad. They're saying your business credit doesn't exist. And now you're getting denied financing. And that's why, is because you've got bad personal credit and your business credit isn't good enough on its own to qualify you there as well. But again, there's no Fair Credit Reporting Act in the business world that requires people and lenders to notify clients and consumers and entrepreneurs that their business credit's being pulled. So even though it's always reviewed, most business owners don't know this. And this is what you want to tell them is, look, when you apply for a consumer loan and you get denied, have you ever got one of those letters from the bureaus that say, yeah, you've been denied and they pulled your TransUnion report? Yeah, I've seen those. Okay. Well, you've never seen one of those in the business world because there's no Fair Credit Reporting Act that says they have to send you that letter. So what's happening in your world is they're pulling your business credit, denying you because you don't have it. And then they're never telling you that that's the reason why, because they don't have to tell you by law that they even looked at your business credit. That's one of the struggles you have right now. And if you continue down the road of trying to get money, you're going to reach the same roadblock until you address the major underlying problem, which is the fact that you don't have business credit and they're pulling your reports and figuring this out. And look, you need to know that anybody can see these reports. So the problem goes even deeper than lenders. See, in the consumer world, somebody has to have your permission to pull your credit report. In the business world, anybody can pull your business credit report for as cheap as $2 or $3. Companies can pull your business credit report. So again, in the personal world, auto dealerships, mortgage companies, there's only certain entities that have the ability to pull your credit. But with business credit, it's public. Anyone who wants your information about your business can do so. This means your prospects, your clients, your competitors can all see your business credit, as well as private investors, people that eventually might buy your company, and all the lenders that you're trying to get approved for right now can all look at your business credit. They're all doing so, and they're all making the decision to deny you as a result. But hey, look, when you get business credit, then you're more than doubling the borrowing ability. Why? Because now you're getting multiple credit cards at most places you're doing business with now. You already have consumer credit. And you could ask them, what kind of limits do you have on your consumer credit cards? Remember, if they have credit problems, they're going to tell you that their consumer credit limits are fairly small consumer limits. They're going to say maybe it's $500, maybe it's $1,000. Okay, well, that's because you have challenge credit. But the only way you can get multiple credit cards, so to get another one of those store credit cards like Staples or Office Depot or Target or Lowe's, is to build business credit. Because when you have access to business credit, then you have double the borrowing ability or more in your case, because your limits are very low now. And with our world, when you're getting a Dell credit card, that might not sound sexy or appealing, but wouldn't a $10,000 Dell credit card help you run your business and make more money than you're making now? Yeah. Would 10 grand at Walmart help you? Would 10 grand at Office Depot or Staples? I mean, the things you want to use money for, printing and advertising and marketing, a lot of these things you could get what you need at these kind of stores using business credit. Whereas in the consumer world, you're probably not even able to get approved for stores. And the limits are tons higher than what you're going to find in the consumer credit world. Now, this is something that you need to relate to them, because a lot of people will say, well, how long does it take to build credit? How long? Well, how long did it take you to build your consumer credit profile? That question always stumps them. Look, it's a never-ending process. You're going to get credit. You're going to continue to get more and more and more credit. That's what building credit is you're going to get more credit with higher limits. But per SBA, limits are commonly 10 to 100 times higher than what you're going to find in the consumer world. Especially people with bad credit need to hear this because they're used to having credit limits of 500 bucks, $1,000. They're able to come in and get vendor credit right away for $500 to $2,500. They're able to get store credit for $1,000 to $5,000 within 60 days. They didn't even know that was possible. Some of them never even knew you could get a $5,000 credit card. They never even thought they could get a $5,000 credit card. And the reality is if they have challenge credit, it might take 5, 7, 10 years before they're ever able on the consumer side to get those kind of limits because they have to fix the credit first. Then they have to get approved for credit in the consumer world. Then the limits are going to stay low until they use more credit, and then they get higher limits and higher and higher. And that usually takes years to really get those limits higher. But in the business world, they're able to come in and get store credit to buy most of the stuff that they want to buy anyways within a very short period of time. So obtaining business credit radically increases the amount of money they have available. Okay, so for example, if they are used to getting a $300 Staples credit card, they're probably going to get $3,000 to $30,000 in the business world. I mean, massive limits to buy the kind of stuff that they're going to need to buy, the kind of stuff that they were looking for money anyways to buy, they're going to be able to get at stores within 60 or 90 days. Okay, and again, they have a need for higher limits than an individual ever will. And this is another reason it's hard to scale a business using personal credit. So if you're dealing with people that have good credit, well, look, what are you going to do? Use your personal credit to do so? Are you going to go out and get a business credit card, quote unquote, when you provide your personal social? Well, the problem with that is that the limits on those kind of accounts are radically lower than real business credit accounts. Real business credit accounts that are based on your EIN are easily 10 to 100 times higher because a business has an appetite for more money. So if you're trying to use personal credit or try to get business credit accounts using your social, you're going to be inhibited by lower limits. But when you do it the way that we're going to help you do it, you're able to get substantially high limits within 60 days, 90 days, continue to get higher and higher limits, which helps you get extremely high limit store credit cards and Visa and MasterCard cash credit cards. Now, another reason business credit works for them that you want to explain is it's perfect for startups. Okay, most lenders aren't going to touch them unless they've been in business 2 years and have good tax returns. Okay, most popular cash flow type of financing, they have to be in business a year. That's a big deal. If you look at your Facebook news feed or ads over Google, everybody's pushing cash advances. That's what everybody is pushing. And all of them promote 1 year in business, 1 year in business. Well, if you're dealing with somebody that hasn't been in business 1 year and they don't have good credit, then they're pretty much eliminated any other kind of financing other than business credit. So most consumer credit approvals are based on personal income. Okay, but with business credit, even a startup can get a lot of new credit, even if they don't yet have a lot of revenue. And they don't need financials. So look, remember we talked about how you don't have tax returns? And that's really going to be a problem because without tax returns, you're not able to actually come in and get access to the money that you're really wanting to get. Well, with business credit, it doesn't matter. You don't need tax returns, so you're still able to come in and get the financing that you're trying to get. So let's face it, as you're talking to them, they write off all the expenses for reasons we talk about. They usually have a smaller net profit, but business credit doesn't look at financials or bank statements. So even with no cash flow going through their bank account or limited, then they're not inhibited. Cash flow financing, private money, alternative SBA, conventional loans, all of it, they've got to have financials or tax returns for approval. Business credit, they don't need those things and they can still actually get approved, nor do they need collateral. Most business lending requires some kind of collateral. SBA, okay, alt SBA, private money, all collateral and asset-based product require collateral, okay, because the risk is so high in the business lending space. So, hey, look, if you're high risk but you have collateral, well, then it may be doable. But when you're high risk and have no collateral, then that's a pretty tough nut to crack. And that's why most conventional lenders are so hard to get money with because of that risk. And that's something that you want to walk through with them. It's also why SBA requires all business assets they have and even personal assets if it's not enough, because they need a lot of money to offset the risk of lending to a business. So business credit is one of the only ways to get money without providing collateral to offset that risk. Really, that's what the customer needs to know. What they need to know is, look, here's the deal. I can get you money based on your cash flow. I can get you money based on your collateral, and I can get you money based on your personal credit. In your case, you have bad personal credit, no collateral, limited cash flow. That's a problem. That eliminates all lending options as we talked about. But business credit's the answer because it's the only answer. The only catch-all solution where you can get money for your business without collateral, cash flow, or good credit. When you have none of those, you only have one option left, which is business credit. And you're going to find I'm one of the only people out there that you'll ever run into that can actually help you with a solution when you have none of the cash flow, credit, and collateral that's required to qualify for most financing. Now, they also need to know that when they provide the social, that they're personally guaranteeing their business debts. Now, here's the honest truth. When you're dealing with somebody that has credit problems, they don't tend to care as much about this. It makes sense, right? They've already shown that they're willing to default and not pay their bills. But if you have somebody that does have good credit, this is a big, big, big driving factor that will drive them to buy because they don't want to personally guarantee their money. They have an ego. They're like, I got personal credit. Why do I have to guarantee this money? And you know what people tell them? Well, you have to. It's what's required. You need it. You don't have a choice. You're going to be one of the only people that's ever come to them and go, hey, man, I can get it done without a guarantee. You don't need to actually have a guarantee with business credit. So this means that they're not personally liable for their business debts. And that means the lender won't be able to take their home, their cars, their stock, their bank account. Now, this is important because it ties to one of the fundamental human desires and needs, fear of loss. We're all afraid of losing what we have. And whether somebody has good or bad credit, it's good to speak to the fact that business credit is one of the only way they can get money without a personal guarantee and explain to them that that way, no matter what happens in their business, that people aren't going to come. The lenders and the collection agencies aren't going to come after their personal assets. And that does mean a lot. You do want to mention that whether they have good or bad credit, because that fear of loss is a big driving factor that will get people to buy. So business owners don't expect to fail, but most businesses do. And it makes no sense to take their family's financial future and put it on the line if they don't have to. Okay, remember, a lot of times the reason a business fails has nothing to do with anything they can control, such as shifts in the economy. And I talk about that because, you know, I stand in front of rooms and say, how many of you expect to fail in the next 12 months? And nobody raises their hand. But statistically, you know, at least 6 out of 10 of them will fail in the next year, but none of them think they're part of that 6 to 10 that will. People don't expect to fail. But you need to remind them, look, it's not about you failing. It's about you going late. It's about you not being able to pay one bill. It's about things out of your control that mean you've got to pay one thing versus another that force a lender's hand where you do default on one thing and then they're coming after your personal assets. And then a bad situation got much, much, much worse. And if you don't know anything about business credit, hey, it is what it is. But now that you know there's an alternative, it really doesn't make any sense to risk it all if you don't have to. Okay, so there's no question. Again, running a business is obviously risky, so there's no reason to do a personal guarantee if they don't need to. So the value of business credit when you said they sell their business, something else you should touch upon. Okay, look, anyone who's bought or sold a business is going to tell you the importance of building business credit, okay? Because now that you know that anybody can pull business credit, Mr. Customer, think about it. What's a potential buyer of your company down the road going to think about your business if they look at your credit right now? Would you buy this company if you see that it had no established credit? What does that reflect about the actual validity of the company itself? Is the company established? Do you pay your bills? I mean, those are the things that happen with a successful company. But when you have no business credit profile and score established, well, then you look unestablished. You look like you're borderline bankrupt at that point. That's not something that somebody's going to want to buy down the road. And again, this is important because a lot of people don't get in business to be in business. They get in business with a plan of selling their business, going public. A lot of people are wise and they have exit plans. And when you start touching upon their exit plan and go, you got no exit plan if you have no business credit, it's pretty legit. It's pretty true. It's pretty accurate. And again, that really appeals to their fear of loss. So if you could choose from 2 companies to buy, one that has business credit and one that doesn't, which one are you going to choose? I mean, obviously the one that has a good credit profile and score with lots of available credit is going to be more appealing to a buyer. So again, if they're down the road looking to sell the business, this is something that's going to be very, very, very interesting for them, something that they're going to want to consider. And another thing is that it eliminates any competition they have. Most of their competitors don't have access to money, don't have access to capital, don't have access to credit, so they've got slow growth ahead of them. But when you have access to money, you can grow faster, you can eliminate the competition. It's easier to test advertising, do the types of things that they need to do, and they can do it all without putting their personal financing in at risk. I was just on a podcast interview, and this was exactly one of the things that we were talking about is, hey, look, who needs access to business credit? Who needs access to financing? Well, the answer quite simply is everybody, because when you grow a business, this is what happens. A normal business grows organically, which means you take your profits have to go back into the business to grow the business as well as pay yourself. Well, the problem is most of the time the growth is very slow because you don't have a lot of profits to reinvest, to advertise, market, and grow and scale. So you're only growing at the level of profits you could put back in the business to grow. Most people don't put money into the business, and as a result, they grow very slow. But when you have the money to reinvest, then you have a huge advantage of your competition because you could spend more, you could do more. It's easier and faster for you to grow and get business in the door because you have money available to actually be able to do so. So business credits, look, it's a catch-all. Business credit works when no other type of financing is going to work. This is what your customers have to know. It works when nothing else is going to work. Okay, this is why it's a perfect fit for anybody that's looking to get money and can't get financing. But here's the deal. The reason we did the very beginning part is because you're going to have to walk them through a process for them to understand why they can't get money. You can't just say, oh, you're not going to get money. Nobody's going to give you money because of this. You need to map it out from a lender's perspective. Think about this, man. Just think about this. From a lender's perspective, here's where you are. You don't have collateral. You don't have cash flow. Your credit's bad. Your bank credit's bad. Your business credit doesn't exist. You even said yourself you don't really have any merits of what would make you lendable. The credit you have on your credit report you're not even paying as agreed. And you said your limits are $1,000 and you're asking for 10 or 20,000 when your credit reflects that you're not able to pay 1,000 successfully. I'm not beating you up at all. I'm just telling you from a lender standpoint, this is what they see. And what we have to do is change the perception. Because as we all know, perception is reality. And right now, the lender's perception isn't good. That's why you've been getting denied. What I want to do is flip the script. I want to give them a good perception of your business. I want to give you good business credit that they look at and use to approve you, but along the way, help you get a ton of credit you can use to fund the business, to open up all these other funding options as you go. Okay, again, most won't tell you that they don't have the money to buy if that's the case, or most will. Okay, so this is why it's a perfect fit for entrepreneurs. But a lot of people are going to tell you, hey, look, I don't have the money to buy. What you said makes a ton of sense. It sounds like business credit's the answer, but here's the deal. I can't afford it. I don't have the money right now to be able to do this. But look, we all know it takes money to make money. I mean, we all know this. So if you have no business yet and no real means to front any kind of money or get any kind of money to get funds to grow, then how are you ever going to succeed? I mean, the chances are you're never going to succeed. Think about it. I've given you a path to get money now. Then you establish the business credit, you put it in the business, that gives you revenue, which opens up revenue financing. I'm helping you fix the personal credit, which opens up unsecured financing. That gives you assets that you use for collateral financing. I'm giving you a path to get more money than you know what to do with in your business. And you're telling me you don't have $2,500 or $3,500 to actually get started? Well, think of it like this. I mean, if you save money, start making some money, borrow money from family or friends, or take any similar step that a normal business owner takes to get started, then you can get money with business credit. Okay, so all you have to do is, most business owners, the statistic is 74% of entrepreneurs get money from family and friends. Did you know that, Mr. Customer? 74%. So right now you're in a situation where you and I have a plan to help you get the money to fund your business. You need $2,500. You need $3,500. You need $1,000 up front to get started, $500 a month. If you don't have that money, if you can't budget that money, if you can't save that money, then rely on other people that believe in what you're doing and see if they'll lend you the money. See if that's a possibility. Maybe you can give them equity in your business, bring them in as an equity partner, and they invest a little bit for you to get started and then be able to come in and access business credit and follow the steps we've talked about. And that's the first step of the solution to get them access to all types of financing, as we talked about. So after all, I mean, are they really dedicated to the business if they can't even come up with 2 or 3 grand over 3, 4 months? I mean, that's like $500 a week. So if they say, look, I really want to succeed and I need 10, 15, 20 grand, nobody's going to give you 20 grand, dude. We talked about why, but I can help you get business credit to get well more than 10, 15, 20 grand. Okay. But the reality is that if you can't even come up with $500 or $1,000 to get started, well, then that just means you're not serious. You're just not serious about what's going on. Because you know what? If I was on my deathbed and needed $1,000 right now to save myself, I'd get $1,000. I'd find a way. I'd go sell newspapers. I would sell trinkets on the street corner to get the $1,000. And right now, the difference between staying where you are and getting the business you want and having everything you want in life because you have that business, right now, that's the decision that's being made. So, you know, are you willing to take the steps or not? And investing the 2, 3 grand to get 50 grand outside of business credit isn't even possible. I mean, in a situation where you can come up and buy a finance suite for $2,000, $3,000 and able to get vendor credit, store credit, and cash credit to get 50,000, nobody else is going to provide you any kind of opportunity to make that happen, and a path not just to get you business credit, but to open up unsecured financing, collateral financing, cash flow financing as we continue to build and grow the actual business. So for those who can get money, the question is, do they want to personally guarantee indefinitely the money they get? So we talked a lot about people that have bad credit, that don't have collateral and don't have cash flow. And we did that for a reason, because I believe that 70% of the people you talk to are in that boat. That's from my personal experience. I'm around a lot of high-level people, and even then, when I'm talking to people, a lot of people are in that boat with no cash flow, credit, or collateral. So that's why I talked about that scenario so much. That's most of what you'll deal with. But what's the flip side? Well, it's the people that have good credit, the people that feel entitled because they have good credit. Well, then the question is, do you want to personally guarantee your money indefinitely? Is that what you're looking to do? What's your goal? Do you always want to provide your social and your personal assets to get money for your business? This'll, excuse my language, it's going to piss them off, because people are upset. They have egos. When they have good credit, they're egotistical and they feel people should just give them money, which isn't what happens without a personally guarantee, because they have good personal credit. Well, that's not how it works. So as a result, when you say, do you want to continue to personally guarantee the money? Most are going to say, absolutely not. That's something I want to get away from. Well, do you want to continue to pay high rates indefinitely, or get money at low rates? Well, I want to get money with lower rates. Well, if you get money for your business, then that will determine how much you get. Business credit's going to determine it, and the terms. Every lender looks at business credit to determine your approval. And for an SBA loan, SBA requires that a FICO business credit score be pulled to use to determine approval. Business credit is used to determine every single loan approval. So what's going to happen is, if you don't get business credit, you're always going to be personally guaranteeing your money. You're never going to be able to get good money at good terms, because business credit's one of the driving factors. So anyone who wants money now and also wants to get more money down the road and wants to get even more money after that, business credit's the only answer. Because if they qualify for financing now because they have cash flow credit or collateral, well, then you can get them money now. And then they also get business credit and get even more money, which opens up the door for them to get even more money at better terms. And it's all only possible if they build business credit. And that's the messaging you need to relay to somebody that does have good credit versus somebody that doesn't have good credit. And it also helps to eliminate personal liability at the same time. So again, you're not personally liable for what's taking place in the business. Okay. And these are the reasons you want to tell your prospects business credit makes so much sense. Now, look, undeniably, business credit makes exceptional sense for you. Undeniably, it makes no sense. You know, you can't get financing, and now you can with business credit. I've shown you a path forward. Or you have good credit, you have collateral, you have cash flow, and you can get financing now. But even then, you're going to continue to pay high terms on the money you get in the future until you build business credit. Either way, they need business credit. So now what are you going to do? You know it needs to be done. Something you need to have. So you got a couple options. Go at it and do it on your own. Okay, you might even be able to look and find some information out there and be able to how to build your own business credit. But here's the problem. You're going to pay $700-800 a year to Dun& Bradstreet Credibility. You're going to pay a few $100 a month to get your phone number listed in 411 unless you find a free option, which isn't readily available. You're going to spend $600 a year for credit monitoring. So you're going to spend $1,600 a year to try to do this on your own for everything that we're giving you as part of the solution. Now, side note, they're not getting full credit monitoring for free with the finance suite. They're getting access to Experian Smart Business data, which tells them how many trade lines they have. But that's all they need to build business credit. They don't need the profile, the whole credit monitoring anyways. So the bottom line is, this is what you want to relate to them. You now know you need it. You now know it makes sense. So you got a couple options. You work with me and you get all the stuff included, or you do it on your own. You're going to spend $1,600 a year just to get the basic necessities of what you need that's included with me. And with me, you're also getting 12 months of advisor support where we reach out to you and you reach out to us to help you every step of the way. You get access to finance officer for 5 years. So as we execute this plan to get you business credit, to help you make more revenue, to then open up revenue financing, to work on fixing your personal credit, to open up unsecured financing, to help you build assets, to get collateral financing. As we execute this plan, these finance officers are going to be there to help you get financing along the way. We're helping you get starter credit, whereas without us, you won't even know where to go to get credit to even start building business credit. Then we're helping you get high limit store credit, $5,000, $10,000 at Dell, Walmart. You won't even have any idea where to go to get store credit or what their approval criteria is. With us, we tell you these sources, give you access to one click to get all these sources, and map out their underwriting guidelines along the way. And you're able to get 100 grand plus in cash credit. I mean, within 12 months or more, you're going to be able to gain 50,000 in cash credit, and the 12 to 24 months, you're probably able to get $100,000 in cash credit. We give you the sources through the finance suite to do so. Ladies and gentlemen, that's not readily available. Pete, who will probably be on hosting the webinar next week, has helped thousands and thousands of people build business credit. And when him and I first sat down for lunch for an interview, he said, look, there's not a lot of that cash credit available. I said, look, we've got about 9 or 10 sources available in our system. He goes, what? I didn't even, my company, I never even heard of that, because most people don't know where to go to get cash credit. In the finance suite, it's available. They need to know that. And they're working with us to execute that plan of opening up all financing options for them. So basically, ultimately, it really becomes a no-brainer, because if they can't get financing, we just showed them a path where they can get financing. And even if they can get financing now, then we're still putting them in a position where they can eliminate their personal liability, get access to even more money with business credit. And then once that business credit's established, that helps them get even more money at better terms. So no matter what their scenario is, it really becomes really a no-brainer. So that really wraps it up. I think I'm about right on the mark, 3:59. I'm going to open this up and answer any questions you have to walk through this with you. So kind of in summary, hopefully you got the gist of what we're doing, is that when you first talk to a customer, you got to ask them qualifying questions. But then you don't want to just say, do you have collateral? No, and move on. You want to address what that means from a lender standpoint. Hey, you don't have much revenue. Well, that's kind of a problem, because that doesn't show that you're established. It shows you're kind of almost a concept at that point. How about tax returns? You have 2 years tax returns that show profits. Ouch. So you don't even have good tax returns. You're not even showing that you're generating any profit. Well, how's your personal credit? Oh, you've got issues there. Well, the problem there is that you're not even able to show that you're able to pay on the amount of credit you're being given now, and the credit you're looking for, the amount of money you're looking for, is substantially higher than the credit you're struggling to pay right now. So you can imagine how that looks to lenders. Then when you have no business credit and bad bank credit, now the problems are compounding, but all that can be offset with collateral. That helps reduce the lender's risk. Ouch. So now you have no collateral, no assets to leverage either. So look, Mr. Customer, I mean, let me ask you straight up, what am I not asking you? What makes you lendable? Well, I've got this idea and this and that and this and that. But look, I mean, no offense, but your credit's bad across the board of all 3 types of credit you have. You have nothing to offset the lender's risk. And what you're describing to me obviously isn't successful yet, because you're not generating much revenue and your tax returns don't even show you're profitable. So every single thing that exists shows the opposite of you being able to go out there and run a successful business. This is what makes you so risky. So since you have no lendable merits, we need to create one. Business credit's the first step. Once we build your business credit, then you have cash injection with money in your business. Can you generate more revenue? Oh yeah, I definitely can. I can do this and this. Okay, great. Well, then that opens up revenue financing. I'll help you fix the personal credit. That'll open up unsecured financing. Then you'll accumulate assets, which gets you collateral-based financing. And since you built your business credit, then that's going to give you a good business credit profile and score. You're going to be putting more money in the bank to help your bank rating. And that's what's going to open up the door for Alt-A loans, SBA loans, private money loans, and all the high dollar loan amounts. That's my plan to get you what you're looking for. Well, it sounds great, but I don't have money to get started. So you're not really serious then about running a business. Well, yeah, I am. Well, how can you say that? I mean, I've mapped out a plan to get you everything you're looking for, something that's going to cost you, over $1,500 a year if you're going to do on your own. It gets you money when you don't have cash flow credit or collateral. And all you have to do is find a way to come up with, whatever, 500, 1,000 down and $500 a week, $150 a week, $500 a month, whatever your pricing is. So I've mapped out the perfect solution. And what you're saying is that it's not important enough for you to do that, to come up with the 2-3 grand through payments to be able to get 50,000 or more in money. Then that's not something you're really serious about. So I'll send you some free information to you're serious. Those are the type of things that you want to really have conversation-wise with the customer. Or they say, I do have that. Great. That makes you lendable. So on top of helping you build business credit, you can also get this. Here's the reasons why you want to build business credit. For you, most importantly, it's because you don't want to have personal liability. It's because you don't want to pay high terms. And if you don't have a good business credit profile, you always will, right? You know that, right? What's going to happen if you have crappy personal credit? Are you going to go in and get a good interest rate on a car loan? No. Same thing in the business world. You have crappy or non-existent business credit, you're not going to get good rates on any kind of business credit card or loan you get. That's why we got to address it. So now I've given you a lot of talking points, a lot of strategy to deal with both types of actual people. Again, let me get to questions that you have. That way I can address all of them before we jump off. When speaking to a group, what's the best approach to these objection questions? Well, in my opinion, JR, it's to address them before they're even asked. You see, what happens is people run an internal dialogue in their head whenever you're talking to them about anything or trying to sell something to them. And that dialogue usually starts with, yeah, but this isn't going to work for me. I've got bad personal credit. Yeah, but this works for existing businesses or big companies. Yeah, but I'd have to be in business at least a year, 2 years, or buy a shelf corporation for this to work. Yeah, it's all yeah, buts. So what I've learned is that you get that out of the way to begin with. Look, you can get business credit even as a startup. You don't need to buy any kind of shelf corporation. You don't need to have good personal credit to do it. What I found is that knowing these things we talked about, knowing what the objections are key. Then the beginning part of your presentation speaks to those objections right away. Look, anybody can do it, even as a startup. Yeah, you probably think only the big companies can build business credit. And the people are like, get out of my head, dude. How did you know that's what I'm thinking? They don't actually think that, but what's happening is it's like a mental checklist. They're sitting there going, man, yeah, but this sounds like for bigger companies. Look, I know you think that this might only work for larger companies, but you think that because larger companies have CFOs that will teach them how to do this. You don't need a CFO. You got me. I'm going to teach you how to do this even as you're a startup. And you might think that because you have bad personal credit, you can't do it, but I'm going to show you how to build business credit without the Social Security number beyond the applications. So in my mind, JR, is you address these things up front. Now, a lot of people make the mistake of talking price up front. And I'm not saying that's a mistake. Everybody has their own strategy. The problem there is you can't talk price until you talk value. You just can't in anything. If you really want to make a successful sale, you have to talk value of this is all that you're going to get out of it. Then you can talk price, and then you can overcome the price objection at the end. Well, I can't afford it. Really? You're telling me that if your life depended on $1,000, you couldn't come up with $1,000. Think about it. What would you do? If you came down with some disease, if there's a drug that costs $1,000 and you take it, you're cured, where does your brain go right now? Where are you going to go? What you going to do? No, don't rob no banks. What you going to do to get the $1,000? The minute you put something like that in somebody's head, their head starts going into problem solving mode. Like if you go to me and go, look, man, well, here's the deal. You got a disease, you got $1,000, fixes it, or you're dead. What are you going to do? I'd be like, oh, dude, I go into these 4 friends. I'm going to my mom. I'm going to my dad. I've got like a bunch of crap I could sell right now that I don't use. I got those computers. What are those computers even doing in my closet? My brain clicks to problem solving mode. And then all of a sudden they realize, wait a second, maybe this is possible. And again, maybe they already have the money, but they don't want to invest it. And then the easy way to overcome that objection is the end is say, look, would you spend $2,000 to get 50? I mean, think about this. If I'm in a room with you and I said, here's the deal, dude, you give me $2,000, I'm going to give you 50. Are you telling me that there's no way you can find out how to get $2,000? There's no way. You have no solution to get $2,000 if I could give you 50. Like, and they're like, yes, that's what I'm telling you. Then be like, this is going to be a simple conversation. There is no way you should run a business. I mean, seriously, if somebody couldn't come up with $2,000 to get 50, they don't have the ability mentally to probably run a business, because otherwise most people are going to run into problem solving mode and come up with a million things they could do to get $2,000. And so that's something you don't want to address until the end is price objection. But all the other objections, JR, you just want to address them before they even ask the question. Just sold 3. But need to manage more. That's fantastic. Congratulations. That's awesome. Hopefully you made a good amount of money on the 3 you sold, and it's a phenomenal start for you to do 3. So the next thing you got to do is do volume. Well, that's fine. That's easy to do. All you have to do is figure out how many units you want to do in a month. Maybe you want to do 10 and start working it backwards. How many people did you have to talk to get to the presentations to do those 3? How many presentations did you do to get to the 3? Now back it up. How many people do you have to talk to in a day to get to that number? You got to get in front of that many people. And in that case, when you're starting to make money as you are, then that's when you want to bring advertising and marketing into it. In the back office, we've got a lot of webinars on everything from doing seminars to print media advertising to doing Facebook to pay-per-click to everything in between that will help you get that done. But congratulations on the 3. That's awesome. What's really the best price for business credit? $5,000, $2.5 grand. Maurice, it comes down to what you can sell, man. That's what I found. That is exactly what I found. Is it comes down to how scared you are to ask for what you're afraid to ask for. And I don't say that in a derogatory way. I went from selling business credit at $100 to $150, $200 a month to selling a finance suite for $2,500 to $3,500. It scared the crap out of me. I was afraid to ask for the money. Most salespeople really are afraid to ask for the money. So how much are you not afraid to ask for? That's the question. Realistically, in my mind, you should sell it for $2,500 to $3,500. You should sell it for $500 to $1,000 up front and $150 a week after that for about 24 weeks. So if it were me, I would do one payment for $2,500. That's what I used to sell the finance suite for when it was nothing and I knew nothing about it. Or I would give them payment options that account for $3,500, $4,000 in total price if they were to do payment options. That's what I would sell it for. I think people out there that are selling it for $5,000, $3,000, or $4,000, $5,000, $6,000, which we have partners out there that are, they're offering a whole extra layer of servicing beyond what our advisor team is. They're helping get the applications and submit them to financing. They're helping the customer complete stuff along the way to fill out the business credit applications. So if you're going to start selling $4,000 or $5,000, you're not going to sell many. That's a scary price point. Most entrepreneurs are not going to pay $5,000 unless you're dealing with a very high level group of people. And even then, they're only going to if you're providing an extra layer of support on top of what we are. So to answer your question, I would stay at a one pay price of about $2,000 to $3,000. And then if they're doing monthly payments, I think it should go to $3,000 to $4,000. That's me, but it really comes down to what you could sell it for. Maurice, one more thing. What I found is that it doesn't matter. When I sold the finance suite, I sold it for $1,500, $2,500, $3,500. My closing percentage on all price points was the same. What I found is what they could afford. The money you sell it for doesn't matter. Making it affordable does matter. So if it's affordable, then you're going to sell more. Keep that in mind. And hopefully that answers your question. JR, what's the best selling point to real estate investors? They balk at the 3 to 6 months time to build business credit. How can they use this to purchase real estate? Well, This is what I say. And just so you know, JR, I just got off a podcast with a guy that what he does is real estate investing. And when I tell these guys about business credit, their mind's blown because they can get access to money where they're not able to get money elsewhere. So let me tell you exactly how to do it. After I take a drink of water, I didn't mean to keep you in suspense. I'm a little parched. Okay, so to answer your question of how you address it with real estate agents, I'll tell you directly exactly how you do it. First of all, one of the best selling points for real estate investors is that they can't get money elsewhere. Okay, so that's the problem, is that they're not able to actually get money elsewhere. And as a result of not being able to get money elsewhere, that's a big selling point of business credit. So one of the things I bring up to lenders is, hey, look, Mr. Lender, or to Mr. Real Estate Investor, here's the deal, man. You can't get money at a bank. You know why? You are a high risk industry. And I do this high risk quotes in the air type thing. I say, I think it's crap, but it's the reality. The reality is that when you are considered financial services is what you're considered, nobody wants to lend money to you. Cash flow financing, most popular kind, gone. Private money, SBA, all these financing options are gone. Have you ever tried to walk into your bank and get money? Yeah, I can't do it. Of course not, unless you're getting private money mortgages. So what happens here is that you can't get money through a lot of different places. I can help you get money a couple different ways. If you have good credit, I can get you money right away. I can help you get money through our unsecured business financing program right away. Within a month, you'll have access to $50,000, $150,000 or more. Okay, building business credit might take you 3 or 4 months. So let me ask you this: what's a faster solution? And then shut up. It's as simple as that. Okay, so that's exactly what you're going to actually say to them is, what are you going to do to get money faster? And if they don't have an answer, which they're not going to, then say, then what are you talking about? Why are you worried about going 4 months to get money when I can show you a guaranteed way to get hundreds of thousands of dollars without a personal guarantee and personal liability that you can use to either invest in real estate and buy properties flat out, or get with private investors to give you 50 to 65% financing and use this money to offset what they won't give you. And I can get this whole thing done in 4 months regardless of those factors. What else could you do to get money faster? The truth is they don't have an answer. There is no way they're going to get money faster unless they have good credit and can get unsecured financing. That's why business credit is so appealing. They bulk it to 3 to 4, 6 months. That's exactly how I would address that. How can they use this to purchase real estate? Exactly like they would use to purchase anything. So when you get a $50,000 business credit card and 3 or 4 of those, well, you got 100 grand, 150, 200 grand you could use to buy anything. So you go in to buy a property just like you normally would, and you whip down the credit card and you're using that to actually buy the property. Okay, in a lot of cases, these cards even have 0% rates for 6 to 18 months. Then they use the rent from the property to pay the bill and pay down the money they're borrowing, just the same as an actual loan that they would do. Or they're going out and getting private money and getting 50 or 60% from investors and using the credit cards to be able to offset the difference. Because it's easy to get private money from an investor or for somebody that will give private investors money if they're putting a chunk in it themselves and all they need is 25, 50%. With business credit, they can offset what a lender won't give them. Hopefully that answers your questions. Excellent. Nice approach. Yeah, hopefully that works. I mean, that's what works for me on the real estate side. And guys, JR asked a great question that doesn't just apply to real estate investors. Well, I don't want to wait the 4 months. No big deal. How are you going to get money faster? And shut up. Well, what? Look, I deal with all legitimate types of financing. You don't have cash flow. It's the fastest kind of money out there, cash flow financing. You can't get it. You don't have collateral. All asset collateral-based financing is gone. You don't have collateral. Okay. Now we look at unsecured financing. No problem. I can get you money fast in a month or less. All you need is good credit. You don't have that. No big deal. Get a guarantor that does. But don't waste 4 months trying to get a guarantor when we could get you well on your way of building business credit. Even with the guarantor, you can get 50, 150 grand there and still get hundreds of thousands of business credit. No matter what you say or do, business credit helps you get more money to do what you're looking to do. So let's get started on that, because let me tell you what I find. What I find is somebody like you that doesn't have cash flow, credit, or collateral and wants money fast, 4 months down the road, they come back to me and go, yep, I talked to everybody and most of them wouldn't call me back, like you said. Most of them turned me down. Nobody's been able to help me. But again, along the way, I could have had my business credit built and already been in business at this point, buying what I want to buy. And that's what you want to tell people is, look, you delay, you're just going to bang your head against the wall for 4 to 6 months. And then what's going to happen is you're going to come back to me anyways and have wasted all the time that we could have spent getting you access to real money. The question becomes, where else are you going to go to get money faster? And once you've walked them through this process of elimination, saying this won't work for you at all, no matter how fast you want it, this won't work, this won't work, this won't work. There's no other factors that makes you lendable. This isn't a matter of how time frame it takes to get you money. You're not even going to get money right now. There's no way you're even in a situation where you're lendable right now. I'm giving you a solution to not only get you money, but get it in 4 months. There's nothing else like this that exists that will get you money faster. And again, helping and ask them the question of, what else are you going to do to get money faster stumps them because there is no answer. And once they realize there is no other alternative, this is the best and fastest option, then let's go with the best and fastest. You continue to look around. We at least have a solution that will work for you. And even if you continue to look for another solution that's faster, you're at least getting there on this solution while you're looking for that, which I already know it doesn't exist. But if you want to continue banging your head against the wall, do so. But don't just do that. At least get yourself down the right path that will work while you're looking for something that I know doesn't exist. And you might still need to talk to more people to discover that on your own. So hopefully that helps there. Okay, no other questions. So I'm going to go ahead and wrap this up. Hopefully you all got a lot out of this day. Some very different approaches, some different tactics, some different ways of presenting this, some different ways of handling objections that I think will help you, because I used all these firsthand to sell business credit. But again, tune in next week, because I'm pretty sure that I'm going to have Pete on here, and Pete is a huge asset to our team, help more people build business credit than I've ever found. I mean, complete fluke that I found him. I mean, I believe life just kind of puts things in your path when you believe you're headed in a direction. And he came into our path because he's got tons of experience in selling business credit direct. And you can hear his approaches for selling thousands and thousands of customers. Very different than anything I've ever taught you before. I'm kind of scared that his tactics will be so much different than what I teach you, but it works. And I want you to get exposure from people that are doing things that works. And he's going to openly share, because he's not a competitor at all, right? He's on our team. So he's going to openly share, and he's going to be a great resource for you to reach out to and call for coaching advice. He'll be reaching out to you for coaching advice. So I want to get you exposed to him because he has so much knowledge he's going to be sharing with you guys. On webinar or off. So tomorrow is going to be a good week for him to come on and share that information with you. So no other questions. Thank you guys so much. I'm glad you enjoyed this. Thank you for the feedback, Jason. I appreciate it. And I'll have this up live probably as soon as tomorrow in your back office. If there's anything else we can help with, just reach out to us and let us know. Support@creditsuite.com. Thanks, everybody. Have a great day.